Hey everybody, welcome to Money's No Object. I'm your host, Dylan Howell. This is episode number 297 of our YouTube channel and podcast, and I cannot be more excited to continue sharing with you guys personal finance topics that I think can be useful for you in your long-term financial journey. Today, I want to mix it up a little bit, and I want to talk about something that's on the minds of many today and doesn't really take up a whole lot of space in my own, but I hear about it all the time, and so I want to talk about what it is and what it means to us, and that is NFTs. You're saying, Dylan, are you really doing an episode on NFTs? Absolutely, right? So many people are talking about NFTs, talking about buying or quote unquote investing in NFTs. And I have to throw my 2 cents in, and I have to let you know where I stand as far as NFTs and investing and that particular area of, I guess, financial markets, right? So just stick around for a whole expose on NFTs, exactly what they are, exactly what they do, and then we can better understand them and understand if they are actually an investment or not. So stick around for all that and more in today's episode. Before we get started, though, if you could go down below, hit the big red subscribe button, like this video, leave me any feedback in the comments down below, and I'll be sure to respond to anything you leave down there. If you're listening on Apple or Spotify podcasts, be sure to subscribe and leave me a review on either one of those platforms. Follow me on social media at MNO with Dylan, and that's really good supplemental materials to all the things I'm putting out in these long form episodes on YouTube and the podcast every single day. And then if you need somebody to help you to build a financial plan and keep you accountable to that plan over the long term, then I can do that. Just DM me on any of the major social media sites and tell me that you are interested in financial coaching sessions, and you and I can begin working together, pushing towards your long-term financial goals and ultimately pushing you on towards long-term financial freedom, which is what I hope for every single individual who is watching or listening to the show on a day-to-day basis. Now, the past 18, 24 months, whatever, right? Really, ever since we, entered the coronavirus pandemic, you've seen just this huge uptick in individuals being interested in financial markets, especially younger individuals, retail investors, these people who got stimulus checks and they wanted to use them to invest, right? And they just went for some of the newest and, fanciest and shiniest things. And maybe that wasn't the best move. Maybe it's not the best move to just invest in the newest and shiniest things or put your money in the newest and shiniest things. But a lot of people made a lot of money and have continued to do so. One of the areas that this has been relevant is NFTs, right? Now, NFTs, they are kind of the subset of the crypto space, right? You have to use crypto to purchase them. They run on very similar blockchain technology. They use a lot of the same software as cryptos do, and they're just blowing up in many places. They're blowing up in the way that they are utilized in our society. They're blowing up in the way that people want to put money into them. Okay, and they're also blowing up in the way that people want to create new ones in order to capitalize off of the money that they could make right now. Now, what is an NFT? NFT. This means non-fungible token. Now, what in the world are we talking about when we're talking about non-fungible, right? Well, fungibility is something that I came across not too long ago, right? Fungibility just doesn't sound like something that would even be a word. But if something is fungible, right, you're able to replace or it is able to be replaced by another identical item. It is mutually interchangeable. So if it is non-fungible, it is not able to be replaced by another identical item, meaning it is basically one of one, right? It is unique in the way that it is created. So non-fungible, and then tokens. So we're talking about these specific tokens that people can purchase. A lot of them, people make fun. They're like, oh, people are just out buying JPEGs now, right? They are, digital pictures or digital creations or GIFs or whatever else, right? And basically all they are a digital asset that represents a real world object like art, music, in-game items, and videos. They are bought and sold online frequently with cryptocurrency, and they are generally encoded with the same underlying software as many of the cryptos, like I just said. Although they've been around since 2014, they are gaining notoriety now because they are becoming an increasingly popular way to buy and sell digital artwork. A staggering $174 million has been spent on NFTs since November of 2017, and I don't even want to know how much of that was just in 2020 alone, and I guess now in 2021, right? But the reason that this may blow up and the reason that this is used to buy and sell digital artwork in this way is because when everybody had to stay home during the pandemic, what really blew up? Things like TikTok, and people were doing their own music and doing their own art and trying to sell these things and make money. And NFTs were a great way for them to go about it, right? Now, NFTs are also generally one of a kind, or at least of a very limited run, right? And have unique identifying codes. Essentially, NFTs create digital scarcity, right? So they basically take some item, some artwork, something, right? And they make it scarce, right? They make it to where there's only one of them, or there's only very few of them that you could own, right? And so if it's something very interesting or very valuable, then it's something that could really blow up in the NFT space. Now, this stands in stark contrast to most digital creations, which are almost always infinite in supply, right? We can copy digital files, right? We can create new digital files and it's no problem, right? But that's not the case with NFTs. Hypothetically, cutting off the supply should raise the value of a given asset, assuming it's demand. That is true, right? If you cut off supply and demand continues to increase, then price should continue to increase. But many NFTs, at least these in the early days, have been digital creations that already exist in some form elsewhere, like an iconic video clip from NBA games or securitized versions of digital art that's already floating around on Instagram, right? So these things that are already digital, you could have already seen it, you could have already copied it, you could already have a copy of it, right? And not paid a dime for it. So this is, kind of this weird place where people are making NFTs out of things that they already exist, right? They are already replicable, right? This has already occurred. Now, for instance, famous digital artist Mike Winkelmann, better known as Beeple, created a composite of 5,000 daily drawings to create perhaps the most famous NFT of the moment, Every Day's The First 5,000 Days, which sold at Christie's for a record-breaking $69.3 million. Anyone can view the individual images or even the entire collage of images online for free. So why are people willing to spend millions on something that they could easily screenshot or download? Because the NFT allows the buyer to own the original item. Not only that, it contains built-in authentication, which serves as proof of ownership. Collectors value those digital bragging rights almost more than the item itself. Okay, so they are actually owners. They are actually part owners of these specific assets that we're talking about. Now, how is this, how are NFTs different from cryptocurrency? Well, NFT stands for, again, non-fungible token. It's generally built using the same kind of programming as cryptocurrency, like Bitcoin or Ethereum, but that's where the similarity ends, okay? It is not cryptocurrency. Physical money and cryptocurrencies are fungible, meaning they can be traded or exchanged for one another, right? You can take one Bitcoin and exchange it for another Bitcoin, or you can take a Bitcoin and exchange it for $1 or whatever, right? Not that a whole Bitcoin could be bought for $1, but nonetheless, okay? But with NFTs, right, you have one thing that you can sell, right? You can sell this thing, but it is one of one, right? You cannot just swap out one of the exact same thing for it because there's not one of the exact same thing, right? Now, they're also equal in value. Cryptocurrencies and physical monies are. $1 is always worth another dollar. One Bitcoin always equal to another Bitcoin. Crypto's fungibility makes it a trusted means of conducting transactions on the blockchain. NFTs are different. Each has a digital signature that makes it impossible for NFTs to be exchanged for or equal to one another, hence non-fungible, right? One NBA Top Shot clip, for example, is not equal to Every Day's simply because they're both NFTs. One NBA Top Shot clip isn't even necessarily equal to another NBA Top Shot clip for that matter, right? So these things are not interchangeable. They're not the same. It's not like you can take one NFT and another NFT and put them up against one another. Every single NFT is unique. Now, how exactly does this work? Okay. Now, NFTs exist on a blockchain, which is distributed as a public ledger that records transactions, right? You're probably familiar with this if you've talked anything at all about, cryptocurrencies, Bitcoin, Ethereum, whatever, right? Specifically, NFTs are typically held on the Ethereum blockchain, although other blockchains support them as well. An NFT is created or minted from digital objects that represent both tangible and intangible items, including art, gifts, videos and sports highlights, collectibles, virtual avatars and video game skins, designer sneakers, music, the list goes on and on, right? Even tweets count, right? Twitter co-founder Jack Dorsey sold his first ever tweet as an NFT for more than $2.9 million. Essentially, NFTs are like physical collector's items, only digital. So instead of getting an actual oil painting to hang on the wall, the buyer gets a digital file instead. They also get exclusive ownership rights. That's right, NFTs can have only one owner at a time. NFTs' unique data makes it easy to verify their ownership and transfer tokens between owners. The owner or creator can also store specific information inside them. For instance, artists can sign their artwork by including their signature in an NFT's metadata. Right, so this is a situation where ownership is real and it is unique. And if you want to buy or sell something from the previous owner, then all of those rights, all of those specific details that are necessary to that specific NFT will come along with it. Now, what all are they used for? Okay. Blockchain technology and NFTs afford artists and content creators a unique opportunity to monetize their wares. For example, artists no longer have to rely on galleries or auction houses to sell their art. Instead, the artist can sell it directly to the consumer as an NFT, which also lets them keep more of the profits. In addition, artists can program in royalties, so they'll receive a percentage of sales whenever their art is sold to a new owner. Right, this is an attractive feature as artists generally do not receive future proceeds after their art is first sold, which this is really cool, right? This is really cool where artists or people who make these specific NFTs, they can get a percentage every time that NFT is sold, and thus continue to make money on the art that they created. I think that's pretty neat. Now, art isn't the only way to make money with NFTs. Brands like Charmin and Taco Bell have auctioned off themed NFT art to raise funds for charity. Charmin dubbed its offering NFTP, right? Non-fungible toilet paper, haha, right? And Taco Bell's NFT art sold out in minutes, with the highest bids coming in at 1.5 wrapped Ether, equal to $3,723.83 at the time of writing. Okay. Now, even celebrities like Snoop Dogg and Lindsay Lohan are jumping on the NFT bandwagon, releasing unique memories, artwork, and moments as securitized NFTs. Okay. So NFTs, they can be bought on several different sites. One of the most common is OpenSea, right? That they've really blown up in the recent months. But the question really comes down to this, and this really comes down to the crux of this video and exactly why I wanted to cover this today. The question becomes, should you buy them, right? Should you be buying NFTs? Should you be, quote unquote, investing in NFTs? And there's a reason I say, quote unquote. Now, it's important to understand, first and foremost, what investing is, right, before we talk about investing in something, right? And an investment operation is one which, upon thorough analysis, promises safety of principal and an adequate return. Operations not meeting these requirements are speculative. Okay, so let's think about that. Upon thorough analysis, okay, can you do some analysis on an NFT? I don't know, right? And here's why I don't know. Because NFTs, it's collectibles, right? It's art. It's things that are just digitized, right? It's collectibles, right? It's things that people want to own, but how bad do they really want to own it? It's all driven by supply and demand. So how can you do real thorough analysis on an NFT or on something's demand in the market in the future? I don't know how you would do that, but let's say you could, okay? Let's say you could do that. Let's move to the next part. Promises safety of principal. Now, who's to say that it offers safety of principal? Who's to say that whatever you're sold is actually valuable? Well, just the market itself, right? You're not actually being told that it has some intrinsic value, right? It's just what people are actually willing to pay for that thing. And then an adequate return. Now, this is a place where people are like, oh yeah, NFTs, you can get a really good return, great returns, all this type of things. Well, a bunch of people are buying NFTs at very, very inflated prices, very, very high prices, creating a very bubbly situation, right? Do you think they're going to make an adequate return, especially over a longer period of time? Do you think that's actually going to be the case? And I want to really raise this question, right, when it comes to asking, is this an investment or not? Do you think that NFTs, right, as a group, right, what percentage of them do you think will still have some type of value 10 years from now? My guess, not much, not many. I don't think many of them will have the immense value that has been put on them 10 years from now, because as technology changes, as people perceive value differently, people might sell these things, right? And be like, this isn't as big a deal as we wanted it to be. Now, that's not to say NFTs themselves may not be a big deal. But that's to say that NFTs, just where anybody is creating one and everybody has some value that is associated with their NFT and everybody's making money, that just will not persist. It does not persist in financial markets. So in general, right, I'm going to say this is not an investment. This is speculation. You're speculating that whatever NFT you're purchasing, if you purchase NFTs, is going to just go up in price. Right? And just looking at price is not investing. Warren Buffett said that many, many times. If you're just looking at price, you are not investing. Now, let's think about speculation. Okay? Is speculation an all bad thing? It can be. Okay? But I believe that great returns can be made out of speculation. Right? Of course, we want our money to go up in value. Sometimes you take more risk on things you may not understand as well as others, and things that don't have true intrinsic value. Right? And maybe you can still make good money, right? You can speculate, okay? But how much of our money should we actually use towards speculation, right? And I've given you guys a rule before, and I'm going to stick by that rule here. Here's my rule. My rule is you must have at least built $10,000 in traditional investments, stocks, bonds, mutual funds, ETFs, all the like, right? Real estate, whatever, okay? Have at least $10,000 in equity of the traditional investments that we talk about all the time. Then no more than 10% of your portfolio should be speculative. No more than 10% of your money should be speculative. Okay. And if it increases in value past that 10% margin, then you should sell some to bring it back down. Okay. And this should be all speculative things added together, should not be more than 10% of your portfolio, right? The amount of Bitcoin that you own, the amount of Ethereum you own, the amount of, whatever meme stock of the day you may own, right? All of these speculative assets, these speculative things to go along with these NFTs, right, should not make up more than 10% of your portfolio, because you can come back from losing all of 10% of your portfolio, okay? But you can't come back from losing all of 40 or 50 or 60% of your portfolio, right? So I want you to have really good traditional investments that are going to grow over a long period of time if you're going to take part at all in NFTs or whatever else. Now, when it really comes down to it, I think it's very, very difficult for us today to determine what's going to have value in the future. Right? Yes, there are a few, NFT and NFT creators and things like that are probably going to have a whole lot of long-term value, right? And are going to stick around for a long time. And the NFT itself is likely to stick around for a long time and be very valuable as an asset class. But are you just going to be able to make outstanding returns in the way that you've been able to the past year and a half or two? I don't think so, right? I don't think that continues to be the case. I think that what you're looking at is a situation where, let's just think about the internet bubble, the .com bubble, right? All these companies were coming to market, they were going public, and they weren't worth anything, right? They weren't worth, the board that the name was written on. They weren't worth anything, okay? But they were going public anyway with, no earnings, in some cases no revenues. But just because they said .com, they could raise all this huge money because people thought the internet was the next big thing. Well, if people think that NFTs are the next big thing, which may actually be the case, then what can we learn from the internet? Well, what we can learn from the internet is that a lot of those companies died, okay? The NASDAQ fell by 90% when the .com bubble finally popped, okay? So a lot of those companies died. So what does that tell you about a lot of these NFTs? Also going to die, okay? So that tells you that there may be some very high quality NFTs and high quality digital art and digital assets to own. They're 100%, right? There may actually be. But how do you go about determining what those are? Okay, I think that's very, very difficult. And I think it's very difficult to disconnect who is out there just making NFTs so they can make some money off of it, right? Because it's in the best interest of people who are rich and famous, or just famous, right? They're well known, in order to go out and create their own NFTs in some way, shape, or form and sell those NFTs because they can make a ton of money doing so, right? It's the same way when the stock market's overvalued and companies either go public or they sell new shares to the market because it's advantageous at current valuations for them to actually get in because they can make a lot of money, right? You can look at it through a stock market lens and see kind of what's going on, all right? But if, NFTs weren't as bubbly, if they weren't as potentially overvalued as they are right now or as they have been in the recent past, then you may not have seen as many people jump in, and you may not have seen as many investors jump in. It's going to be really interesting if people kind of get bored with NFTs, they get bored with investing in that way or putting their money away in that way. It's going to be interesting to see where exactly their money flows to and exactly what is able to stick around in the NFT space. Now, I think NFTs can have a lot of different applications compared to what they're just used for today, right? I've heard people talk about using NFTs in the future for sports tickets, right? Because if you buy a sports ticket, you buy a seat to one chair at one time for one game. It's one of one, right? And NFTs can be one of one. So maybe your sports ticket or your ticket to a concert or a music festival or whatever will be in the form of an NFT, which would be pretty neat, and it'd be a cool keepsake and a way to keep that around, right? I think something like that may actually be the case. And, it wouldn't be all too expensive for the companies to create them in that particular way. So I think that's one particular application. There's many, many more that NFTs can be used for. Many things in this world that are one of one. And as we go increasingly digital, I think you'll see more and more one of one things be in the form of NFTs. Now, ultimately, if you just look at this with a critical eye, right? You look at NFTs with a critical eye and you just look and go, it's a video or it's a picture, right? Or it's some very pixelated art, right? And these things called CryptoPunks, right? They're this really pixelated art. What's the big deal, right? What's the point? I don't get it. And I think that's what leads a lot of individuals to just, think it a joke, think it a big bubble, right? They don't really think about exactly what NFTs are. And I think if you do think about what NFTs are, you can find a lot of value. It's really the same way I think about cryptocurrencies, right? Cryptocurrencies, I think there is a lot of value to be had, right? But I think that value may be concentrated in a few of the major cryptocurrencies. I don't think that you're going to see that value shown in the vast majority of cryptocurrencies that are out there. So nonetheless, I think there is value, but the market gets very watered down with a bunch of things that are just out there to make somebody, typically the creator of that thing, a lot of money in the short term, okay? So do I think you should purchase NFTs? Not as an investment, okay? The NFTs are not an investment. I've made my case. They're not an investment. They will not be an investment in my mind, okay? Because I don't think that purchasing collectibles is investing, right? I don't think that if I go out and buy a Babe Ruth rookie card or whatever, right? Any type of, very valuable baseball card. If I go out and buy that type of thing, I don't think that's investing, right? I think that is speculating. I think it's hoping that something's going to continue to go up in value. And, certain things, it's probably a pretty good bet that they will continue to go up in value, right? But who knows when the party stops? When the demand dries up and you can't sell them any longer, or you can't sell them for the price that you want to sell them for, then you're in trouble. There is no intrinsic value to these particular collectibles, just their scarcity and just somebody else's willingness to purchase these particular assets at a particular time. So as an investment, I don't think NFTs are something that we should look at. Now, if you want to speculate a little bit, I'm okay with it. Now, it can be pretty costly to purchase NFTs, right? And it can be all the more costly to purchase NFTs that are created by some of the more reputable of the creators out there. So you may be able to purchase or speculate in an NFT, but that doesn't necessarily mean that that thing is of good value. It may not be the most unique of pieces or whatever it may be, right? But you could always dip your foot in and see exactly what's going on. I'm all for learning from markets, right? I'm all for speculating in order to learn and taking small amounts of money and putting them in places in order to learn. That's how I got started with cryptocurrency, right? Putting small amounts of money in and learning exactly what's going on as I go, right? It makes you have a vested interest in that market. I'm okay with that, right? But once you determine whether or not something is a good idea, then you can either continue with it, double down on it, or you can step out of the space. And I think NFTs are a place that you may end up stepping out of the space. Definitely, if you buy something of not such great value, you don't know how to determine the value of one NFT versus another, or one creator versus another. I think it's a place where you could be pushed out of the space, but I think in the short term, it could be a place where you make some outstanding returns. So I'm not hating on it. I don't hate NFTs. I don't think it's a bad thing. I think as we continue to move into the digital age, because think about how new the digital age really is, right? Think about when we got iPhones, right? We got iPhones, 14 years ago, okay, for the first time, and that was, groundbreaking. They didn't even have front cameras on them, right? But that's 14 years ago. Think about, we haven't had social media, but, 16, 17, if you go back MySpace, things like that, maybe 20 years, right? But things like telephones have been around for a whole long time, right? And so have computers. Now, not in the way that they are today, but just think about how quickly technology changes, how quickly things change in our world. I think as we get increasingly digital and are getting increasingly digital, these types of things are going to be more interesting, right? I think the way that I looked at baseball cards as a kid is going to be the way that some child, maybe my own, looks at NFTs, right? Looks at sports NFTs and goes, "Oh, Dad, that's cool. That's really neat. I'd like to buy that NFT," right? It's hard to understand, and it's hard to wrap your mind around, especially as somebody who grew up in a more tangible era, in an era where things were not as digitized. But the world is changing around us. We need to learn as much as we can, continue to be shaped by the particular thought processes that are going on in financial markets and thought processes of different types of asset classes, and learn from them. And maybe we'll be better off for that. I think we will. I think we'll be better off by learning as much as we can. And if we learn and we find out that it's a bunch of crap, then we learn that it was a bunch of crap, and that's a learning experience too, right? But if we learn that it's something good and valuable and can be for the long term, that can be a place that you can make a lot of outsized returns, even if it is just speculative return, even if it's just you putting some of your money to work and doing so in a place like NFTs or crypto or whatever it may be, right? So I'm not saying don't buy it. I'm just saying don't buy it as an investment. I'm saying don't buy it in lieu of buying other types of investments. I'm saying don't think that this is something that has to go up over a long period of time or has to have some type of intrinsic value, because it absolutely does not, right? Collectibles are a funky space, right? And I think we're all going to learn exactly how funky they are because asset classes just can't move up in value in a straight line over time, or in a parabolic exponential way over a long period of time. At some point, you see dips in prices. And when you see dips in prices, you really see what people are made of and whether or not they're really interested in this type of asset class, or they're just interested in making some quick money. Because we've seen it with Bitcoin and Ethereum and things of the like that, I think a lot of people were in just to make quick money, and they got scared out of the market when the market dropped from over 60,000 down to like 28 or 29,000 in Bitcoin, right? It happens, right? You find out who's skinny dipping, right? Warren Buffett talks about it all the time. He said when the tide goes out, you can always see who's skinny dipping, basically saying you can see who doesn't really know what they're doing, doesn't really know what they're talking about, and you can see who's going to end up getting caught with their pants down, okay? And we may eventually see that in the NFT space as well. So hopefully this helps you to better understand what an NFT is and exactly whether or not you should be involved in it. And maybe it clears up a little bit of your thought process about these particular types of assets. Personally, I'm not going to be buying anytime soon, but that doesn't mean that you can't do some small speculation and learn as much as you can about such a market, because it may be a place where you can find some value, and it may be a place that you're specifically interested. I'm not so interested in digital art, but you may be, and that may be a place where you can use your expertise to your advantage and make some good money. So Hopefully this helps you out, and hopefully you enjoyed this episode, and hopefully this just helps you to learn a little bit more about where our world's going, crypto, NFTs, and all these different types of digital assets that we learn about more and more on a day-to-day basis. So thanks for watching this video. If you could go down below, hit the big red subscribe button, like this video, leave me any feedback in the comments down below, and I'll be sure to respond to anything you leave down there. If you're listening on Apple or Spotify podcasts, be sure to subscribe and leave me a review on either one of those platforms. Follow me on social media at MNO with Dylan, and that's really good supplemental materials to all the things I'm putting out in these long form episodes on YouTube and the podcast every single day. And then if you need somebody to help you to build a financial plan and keep you accountable to that plan over the long term, then I can do that. Just DM me on any of the major social media sites and tell me that you are interested in financial coaching sessions, and you and I can begin working together, pushing towards your long-term financial goals and ultimately pushing you on towards long-term financial freedom, which is what I hope for every single individual watching or listening to this show on a day-to-day basis. So tune in tomorrow as I continue talking about personal finance topics that I think could be useful for you in your long-term financial journey. So thanks for tuning into this episode of Money's No Object. I'm your host, Dylan Howell. God bless.